Welcome back to MB Capital Strategies. In the past few weeks, I have introduced you to over 20 mining stocks in which I am personally invested, from coal powerhouses like Thungela and Yancoal to gold giants like Newmont and Barrick, all the way to copper and diversified giants like Rio Tinto, BHP, and Glencore. Today, I'll give you a concise overview. All 22 mining stocks in under 25 minutes. And for each stock, always the same format. What they do, the current dividend yield, the cycle position for 2026, and a clear statement about the opportunities, but also the risks. No hype, no deep dive, just my honest assessment as of January 2026. You can watch all the individual analyses again at your leisure here in the playlist. Let's get started, and we'll begin with Anglo American, a diversified miner with copper, iron ore, diamonds, and platinum through Valterra. The dividend yield here is 1.65%. The situation currently in a transition phase after corporate restructuring. Opportunity, strong copper leverage after the turnaround. The risk is execution and remaining debt. Here too, let's quickly take a look at how I'm invested. In total, I hold 7.5 shares. Altogether, I've invested 221 euros, currently about 30% in profit. That amounts to 70.20 euros and a dividend of 16 cents. Now let's move on to AngloGold Ashanti, a pure gold producer with a focus on Africa. The dividend yield is currently around 3.7%, very strong at record gold prices. Opportunity, high operational leverage on gold above 3,000 US dollars. And what are the risks here? The geopolitical country risks. Here I have a total of 3 shares with an entry price of 36.14 euros. Currently, there is an unrealized profit of 161.58 euros. This corresponds to a price gain of 149%. Now let's move on to Barrick Mining, a gold and copper giant with tier 1 mines worldwide. Dividend yield currently at 1.9% base and variable. The current situation is excellent in the present cycle. Opportunity, massive free cash flow leverage. The risks here are taxes and also geopolitical risks. I hold 8 shares here with an entry price of 15.84 euros. Currently, unrealized gain of 170%. This corresponds to a price gain of 218.79 euros. Next, we come to BHP Group, a diversified commodity giant with iron ore, copper, coal, nickel, and potash. Dividend yield currently at around 3.5%. The current situation is very good in the copper boom. Opportunity, copper plus potash decoupling from iron ore. Risk, dependence on China and also ESG pressure. Currently 18 shares at an entry price of 22.88 euros. Price gain of 24%, 102.73 euros. Now to Central Asia Metals, a copper and zinc producer with a recycling model. Dividend yield currently at 6.8%. Extremely stable cash flow value. Opportunities are low cost and a net cash balance. The risk is Kazakhstan geopolitics. Currently 219 shares, entry price €1.85 plus 30%, 124.50 euros, also unrealized here. Then Exxaro Resources, a South African coal and diversified producer. Dividend yield currently at 8.9%. The situation is that coal is in a transition phase. Opportunity, the last strong cash flow lever. The risk is ESG pressure and the risks associated with South Africa. Here I hold a total of 59 shares, entry price €7.72, currently at €10. Unrealized profit of 134.56 euros, which corresponds to a price increase of 30%. Then we come to Fortescue, a pure iron ore giant with green hydrogen ambitions. The dividend yield here is around 5%. The situation is that iron ore is weaker. Opportunity, iron ore rebound plus green upside. Risk, high capex. Here I hold a total of 20 shares with an entry price of 11.33 euros. A price gain of 9.27 euros of 9% and 21.13 euros. Now let's move on to Fresnillo, the world's largest primary silver producer, with a current dividend yield of 1.6%. Situation, strong when precious metal prices are high, which is also the case right now. Opportunity, maximum silver leverage. Risk is Mexico and cost inflation. Here I am invested with 7 shares only at an entry price of 8.33 euros. Currently unrealized 470% and 275.73 euros. Now let's move on to Gerdau, a Brazilian steel producer with a dividend yield of about 4.5%. Situation: the steel cycle is volatile. Opportunity: infrastructure demand. And the risk is Brazilian politics as well as cyclical swings. Here I am invested at €2.72 with 112 shares, unrealized profit of €115, price gain of 37%. Then to Glencore, a trading and production powerhouse for copper, coal, nickel and zinc. A current dividend yield of 1.8%. Situation: one of the strongest cash flow players. Opportunity: trading advantage plus copper supercycle. Risk is ESG and regulatory pressure. There are also currently rumors about a takeover of Rio Tinto. And then we come to Indo Tambangraya Megah, an Indonesian thermal coal exporter with a dividend yield of 13.3%. Situation: the current coal price is declining. Opportunities here are strong cash flow, and the risk is price decline and ESG devaluation. Here too I am invested with 133 shares at €170. Currently an unrealized loss of 11%, which corresponds to €18.80. Yangtze Copper, China's largest copper producer and smelter. Dividend yield currently at 2.7%. Situation: strong copper boom leverage. Opportunities: China infrastructure. Risk: smelter margins and also politics. Here with 40 shares, an unrealized gain of €126.19 and 180%. Kazatomprom, the world's largest uranium producer with a 40% market share. Dividend yield of 3.7%. Situation: currently in a uranium supercycle. Opportunity: supply monopoly. Risk is Kazakhstan's geopolitics. Currently with 11 shares, €30.24 was my entry price, currently €62.90. This corresponds to a price gain of 108%, totaling €359.30. Then Newmont, the world's largest gold producer, dividend yield at about 1%. The current situation: record cash flow during the gold boom. Opportunities here are low costs and the risk is integration burdens. Here I only hold 2 shares with a price gain of 165%, €131. Then Rio Tinto, a diversified top miner in iron ore, copper and aluminum. Dividend yield at about 3.3%. Situation is very strong as it is very well diversified. Opportunity: massive copper growth. Risk is dependence on Chinese iron. Here I am invested with 6 shares. A current unrealized gain of €115 corresponds to a price increase of 28%. South 32, a diversified company in aluminum, manganese, silver, copper and nickel. Dividend yield at about 2.3%. Situation: an underrated cash flow producer. Opportunity: broad commodity leverage, and the risk is cycle sensitivity as with all commodity stocks. I hold 76 shares, entry price €1.68, overall a 56% gain, which corresponds to €70. Next stock is Coke Energy, a metallurgical coke supplier for US steel mills with take-or-pay contracts, a dividend yield of 5.9%. The situation is a defensive cash flow. The opportunity here lies in stable contracts. The risk is long-term weakness in steel demand. Here I hold a total of 53 shares. Currently an unrealized gain of 7%, which corresponds to €24.79. Now we come to one of my larger positions, that is Thungela Resources. It is a pure thermal coal producer with a dividend yield of 12.5%. Situation: coal oversupply. Opportunity: the last wave of cash. Risk: price crash and ESG issues. Currently I hold 402 shares, entry price €5.33. An unrealized gain of 7% corresponds to €157.60 and a dividend of €155.05. Valterra Platinum, the world's largest PGM producer, dividend yield of 3.8%. The current situation is that PGM prices are rising. Opportunity: leverage on platinum and rhodium. Risk is South Africa and the automotive cycle. Currently 11 shares, entry price €36, currently an unrealized gain of 140%, amounting to €594.07. Vale, an iron ore giant plus nickel and copper. Here we have a dividend yield of 3%. The situation: iron ore is weaker. Opportunity: growth in base metals. Risk here as well is Brazilian politics and operational risks. Here I hold 107 shares, entry price €9.17, currently an unrealized gain of 50%. That corresponds to €491. Whitehaven Coal, Australian coal producer, dividend yield of 1.2%. The situation is currently sharply declining. Opportunity met coal rebound. Risk is ESG and a price drop. Here, €3.11. In total, I hold 20 shares, unrealized gain of 65%, which corresponds to €40.66. Now let's move on to the last stock, namely Yancoal Australia. Australian coal exporter with a dividend yield of 8 to 9%. The situation is volatile. Opportunities are China, cash flow. Risks are politics and also the cycle. Here I hold 92 shares, entry price €3.02 with 12% in unrealized gains and €35.76 as the figure. Those would be all the mining stocks. Really introduced super quickly and briefly. If you want to watch the videos again at your leisure, feel free to do so. For each video, or rather for each mining stock, I had about 8 minutes of video material, so not particularly long either. Here, only the latest fundamental data was analyzed. Feel free to watch the videos if you're more interested in one mine than another. That was just a brief, rough overview from my side. What you can clearly see right now, the highest yields currently come from coal, but that's also exactly where the volatility is the greatest. The most stable cash flows come from low-cost diversification contracts, not the highest dividend payout. My biggest takeaway from the entire series, cash flow beats dividend size, cycle beats hope, and cost structure beats the dream story. Thank you for following the entire MB Mining series. If you enjoyed the video, feel free to give it a like. Feel free to comment which stocks you have in this portfolio and which stock I might be overlooking here. Where do you see the greatest growth potential for mining stocks in 2026? And possibly, where will the highest dividends be paid out? As always, stay cash flow oriented. Of course, this video is not investment advice, but simply my personal strategy. I'm looking forward to the next video and wish you successful investing. Until then,